that's great on the business owner side. So let's switch gears slightly to the investor side. So I know plenty of people out there that are residential investors, but they want to branch into the commercial space, whether that's investing in shopping centers, multifamily, even industrial properties. They're performing very well in this environment, and there are opportunities out there to purchase those type of assets, but
right.
They just don't really understand the whole process as it pertains to securing a commercial loan. I mean, it's much different than a residential property. So I thought maybe if you could talk a little bit about that process, that would be helpful as well.
No, that's a great. I love to talk about that. So nailing down the process and nailing it on the head. So up front, I ask for financials. I give people a package. One of the things, the common mistakes that happens is someone misses a document, and I have to go back to them, or it's missed by me. They send me a huge package. I missed one thing, send it to a processing group, and that can delay things. So, being upfront, checking off a box when a lender gives you a checklist of items saying, "Hey, I need this, 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 and this." That's huge. So that's one of the biggest common mistakes we have is there's missing documentation on the front end. A completed PFS, a PFS that has every asset liability on there, because
just for people who don't know, PFS is personal financial statement.
Sorry. So a personal financial statement. Make sure that thing is detailed, and explain, like, if there was, for instance, like, unless it's like a medical collection, if you had let's say you had a collection a year and a half ago and it was just a unique circumstance, make sure that's noted when you tell the lender that information. Because the underwriter's going to look at it, and if there's nothing explained there, hey, my mom was in the hospital, I was taking care of her for a month and a half, I completely forgot about it. Something like that it's a one-off, right? It's not indicative of what kind of borrower you are. But if an underwriter sees it and you don't have an explanation, then you're just that's just a negative factor for you. So that's important. So as soon as I put a loan into my advisor queue, that's what we use, software called Advisor. We submit that to our processing group, and within 48 hours, it gets checked, and sometimes sooner, 24 hours, depending on how the volume looks. Within 24 to 48 hours, we have somebody check for the documentation, say, hey, yes, we have everything we think we need. Once that happens, it goes to our credit group, and usually within 5 days, we have an analyst write up, given that we have everything we need. So, within, I'd say, 7 to 10 days, you have an underwriter's evaluation from when you submit a loan to when or until the credit makes their decision on there. And a lot of times, credit will make a decision saying, "Hey, look, we'll do it this way. We want more." We want more money down. We want more assets. We want an additional borrower. Things like that come up. But let's say we get an approval on day 10. Okay, I go to my client and I say, we've recommended your deal. And maybe a couple days after, depending on how busy they are again, we say, hey, we recommend this deal. We'd like to collect your upfront money so we can order appraisal and title. Those are two things. On the commercial end, unlike the residential side, a lot of times the mortgage company or bank will order the appraisal and title up front, and then check whether or not you're approved, excuse me. So obviously appraisal and title are ordered at that point once we collect those funds. As far as that process, I've seen appraisals take 2 weeks. I've seen appraisals take 4 weeks. It depends on how busy they are, how busy the vendors are. Right now, if we ordered an appraisal, probably not too busy. And so you kind of have that about 5 week gap, say, hey, it's smooth, we get our appraisal back. Once an appraisal comes back on a commercial property, within 2 days, it has to be reviewed by our appraisal group. And in that 2 days, what they're checking for is to make sure the appraisal was written up properly. We've had scenarios where there's parcels that were missing that were a part of the deal. That it happens rarely, but it does happen. But they check to make sure everything's there. And then from there, if we've got all the documentation we need, we've got the appraisal, we're setting up a closing. Now, that's on a big commercial property. That's going to be your, those multiplexes. It's not going to be your single family homes. So single family homes are obviously a lot. Those don't take as long. But when you have huge commercial properties like that, that takes a little bit longer. But you know, when we see a property like that, 4 to 6 weeks, that's my safe number. We can get them done sooner, but a lot of it is dependent on third parties. And a lot of people don't understand that. There's like, where's the appraisal? And I'm like, well, I don't get to go evaluate your property. We have to pay somebody to go do that. So that's a common, hey, what's going on with the deal? Wait on the appraisal. I'm sure you've heard that one 100 times.
Yeah, definitely. And then as far as the underwriting process goes, because you did mention it briefly throughout that whole explanation, is that one of the misconceptions I often hear, which is not necessarily a misconception, but it's something that people put a lot of weight on, is they say that as long as the building produces enough income, then we're good to go. But in reality, the underwriting process is a holistic process. You take into consideration a lot of different avenues. So maybe if you can touch on some of those, because obviously that's a big deal. Obviously, the debt service coverage ratio is one of the things that you guys look at. But I mean, that's something maybe you could talk a little bit about. Yeah.
So no, that's a good question. We don't look at that. That's another speculative thing, right? Let's say you go buy a property and you're at 90% occupancy. Okay, well, yeah, it's still cash flows at 90% occupancy, great. But is it possible that you could be at 70% occupancy, especially when it comes to commercial use space, right? I mean, like if you have retail space, there's no higher turnover rate than retail space, right? So, you know, or as far as it goes, like as far as vacancies go, excuse me. So, you know, it may take a long time to fill that space. So maybe you're not cash flowing for 6 months, or maybe you're cash flowing even for 6 months. Well, we're here to get you into a place that can be. But the underwriter is going to look at vacancies, and they're going to do vacancy rates, and they're going to underwrite cash flow based on vacancy rates as well. What kind of, I guess you could say, counteracts that is going to be global debt service. And global debt service is all of your personal income and your personal debt added with the building that you're acquiring, or any other, you know, rental pieces that you have. So, you know, if you have a building that says, hey, Nick, you know, it's 70% occupancy, I'm at a 1 debt service. I'm servicing my debt every month. That's how it's going. Well, what's your global debt service look like? You know, that's going to help mitigate that in some ways. And a lot of people don't understand that either, is they think, you know, hey, this has to cash flow specifically. You know, if you have a property, this is one of those speculative times where I think it would be okay if it was explained is, hey, I've got a property that I can buy that has 8 units. There's 4 units covered. It only has 4 because there's been work on the other 4 units. Yeah, but I want to buy this property now. I'm going to get people in here within 24 months. Well, how's your global debt service look over those next 3 months while you try to get that stabilized? So there's reasons for speculation, but for the most part, debt service and global debt service are going to be highly looked at.
And then as far as global debt service goes, that's another thing we kind of touch on, is that there are some investors that are interested in getting into this space, but they may not immediately have a large income. So would you agree teaming up with someone who may be able to kind of act as that guarantor, as far as they're be able to kind of have that holistic that pertains to underwriting?
Definitely. No, I think that's great. If you know somebody who is maybe not seasoned, but maybe newer to investing, and they've done it maybe a couple times, teaming up with somebody like that's always a great idea. You know, another thing I always say, and you've probably seen this happen a few times too, a lot of people want to start with single family property before they get into commercial. They really want to understand what that's like. And the cool thing about that is you can go secondary market on investment properties. I think it's up to 6 properties now. I haven't kept up with the secondary market side, but I think you can invest up to 6 properties in your personal name through the secondary market, and you can finance those out for 30 years. So whereas the commercial side, you're looking at about 20 to 25 almost every time. So that's another great way to go. And we handle that here too, is looking through the secondary market rather than just jumping straight into an LLC commercial, you know, side, you know, just get a taste of what that looks like.